Let's begin systematically. Now this is the point where the finance person seems to be ruling the roost. He begins by saying, okay, let us look what does it cost, and the one which gives us least cost we should be able to make. The assumption being least cost means more profit. The marketing person, who is primarily faced with increasing the revenue, says no, it is not based on cost, it is based on how much of money or how much of top line can we make, because the costs can vary. The cost calculations sometimes are erroneous. The overloading of the overhead is based on the number of units or the share of time it takes. So cost does not give you the right figure. And also at higher volumes, the cost per unit comes down. Maybe the marketing guy is going to be judged on the revenue he brings. So there is a point of view to say that let us look at the cost involved. In other words, let's look at the effort involved. The other one is saying let us maximize. So we go down to next level and see and analyze P and Q from the points of view of effort, raw material cost and the selling price. And then let us try and see if we can come to a correct decision. What I will do is, I will try and take a systematic approach to decide which product should I make or what should my product mix be, which is nothing but deciding how much of Q will I make and sell and how much of P will I make and sell. Since Q qualifies to be a better product in most of the criteria, and the criteria listed are the selling price, the input raw material cost, the margins or the throughput that the product gives me, or the effort required to convert the raw material into finished goods. And all these four criteria, Q seems to be a superior product. And if it's not superior product, I challenge anybody sitting to argue against. A product which is giving you more contribution, giving you more throughput, you don't want to manufacture that? Tough to convince anybody with that. And at a time when you know that you cannot meet the full demand. So I begin my calculations like this. The first available minutes will be used for manufacturing Q. To make 50 Q, for which there is a demand with me, I will take away 1500 minutes of resource on B. These 1500 minutes of resource B will give me 50 units of Q. Q demand satisfied. What I am left with is 900 minutes of resource B. In this 900 minutes, I will try and make P. Since I am a two-product company, the other alternative is to make P. Each unit of P consumes 15 minutes of resource B. 900 minutes are available, so the total number of units that I can make is 60. So my product mix looks like this. I will sell 50 of Q and 60 of P. The demand of P is going to be left unsatisfied. But that because I have a constraint. I don't have available resource to manufacture it. But however, I am taking the correct decision. I am making the most profitable product for me. So let's start the calculation. Every unit of Q gives me 60 units of throughput. That means if I sell at 100 rupees, the raw material cost is 40, 60 rupees gets retained within the company or is the throughput that the company gets. It is from this throughput that I will make my expenses. So 50 into 60 is 3000 rupees as throughput Q generates for me. I am selling 60 units of P for which the throughput is 45. So 60 into 45 is 2700 rupees of throughput that P generates. If I add this both throughput, I get 5700 rupees of throughput by the sale of P and Q, and this is all that I can produce. However, when I look at the expenses are 6,000 rupees a week. My God, I have landed up making a 300 rupee loss. Go back to the beginning. The marketing person was predicting a profit of 1500. This profit came by sales revenue minus the raw material cost minus the operating expense. How can there be so much of fluctuation? Both of them were systematic. One was predicting a profit of 1500 and finally we'll end up making a loss of 300. There's a panic in the room. But before we can go to anything, the marketing guy says, hold it, I think we can try and reduce the loss. He picks up the phone, calls up his people. He said, listen, we are making a loss. I need you to work harder and get me some more orders. Okay, sir, we will get you some orders. So what should we get you? Please don't get me P, get me Q. If you can give me an increased number of quantity of Q, which is the more profitable product, I will reduce my loss. Keeps the phone down. Within 10 minutes, the phone rings again. Sir, right now I have a confirmed order of 10 more units of Q. Happy because now you've added a more profitable product in terms of your contribution margins, in terms of throughput, and now you'll reduce the less profitable product. This is logic, this is systematic, this is what we have been taught. If you have available resources, try and make a product which gives you a high throughput. And this product is product Q. We have 10 extra units of order for product Q. So now the calculation looks like this. We have 60 units of Q for which we get a throughput of 60 units. 60 into 60, 3,600 rupees of throughput comes from product Q. Now these 10 extra units of Q will consume 30 more minutes per unit. That means 300 extra minutes will be consumed of B to make this additional 10 units of Q. So the total time which has been taken up of resource B is 1500 to make 50 plus 300 extra. 1800 minutes of resource B get used to make 60 units of Q. What am I left with? 600 minutes of capacity available in which to make product P. I am very happy. Finally, I utilize my resource to make my profitable product. So now, earlier product mix had given me 900 minutes on B to manufacture product P. Now I have 600 minutes. Each product P uses 15 minutes of resource B. 600 minutes divided by 15 minutes for each resource gives me a number of 40. So I'll end up selling 40 numbers of P. Each unit of P gives me a throughput of 45. So 40 into 45 is 1800. Total sum, 3600 came from Q, 1800 came from P.
The total sum now is 5400. Operating expenses are 6000. Our loss is 600.
I added a profitable product and my loss has increased. My earlier loss was 300. Then I added extra 10 units of Q, which is more profitable than P, and I'll end up making a further loss. Think, did we make a calculation error? I don't think so. We were very systematic. Can we think of any other way of answering this question? I don't think so. Any one of us can go and convince anybody to say that, listen, I don't think so we should sell a more profitable product. I don't think so we should sell a product which costs us more in manufacturing. You can't convince anybody. The normal logic and rational thinking says sell which is more profitable, sell which costs less. And by applying all that logic systematically, we seem to be increasing our losses rather than reducing our loss. Does this strange outcome lead to some really heavy probing questions? I think it does. This also helps us to look at improvement objectives in a very different way. Suppose during all this debate that what should we make, we are falling short of minutes of time to manufacture, a young engineer from a production engineering department comes and says, "Sir, I found a method in which I will make the same product by increasing the cycle time on machine C by 3 minutes." What is the first reaction to this? Yes, you say, okay, why do you think it's an improvement? When the total cycle time or the total time or effort required to convert product P and Q both go up by 3 minutes. Why should be this considered as an improvement? Your job is to reduce, not improve or increase the rate of resource consumption. He says, sir, but if you do this, probably you can save 1 minute on B for raw material 2. So you ask him, but okay, let's leave everything aside, you're putting in effort. How much do you think is going to cost? He says, 400 rupees. He says, should I pay you for increasing the time required on resource C? How do we work? We give only one instruction to everybody. Please save cost. Please save time. And here's this engineer who comes and tells you, listen, pay me for increasing the time on C. Again, it cannot be passed by any department as an improvement. Let's look at it from our perspective. He says, I will increase the time required on machine C by 3 minutes per unit of raw material 2. That means if I am selling 100 of P and 50 of Q, I require 150 units of raw material 2. This will take away 450 minutes on resource C. I am only consuming 750 minutes of resource C. 750 plus 450. Total consumption of resource time, 1200. Everybody else will be complaining. The overheads have gone up, the consumptions have gone up, everything has gone up. And are we convinced that is this an improvement? Not in normal dictionary, not in normal parlance. But by doing this, he has reduced the time required of resource B for manufacturing raw material 2 by 1 minute. What does this mean? Out of the 150 units of P and Q that I had decided to manufacture, I will consume 150 minutes less. Or in other terms, I am making 50 units of Q and I am making 60 units of P. These 110 units will now consume 110 less minutes at B. With this available time, I will manufacture what is available with me in my demand, which is product P. In this 110 minutes, I can make 7.33 units of P. The equation is simple, 110 divided by 15, 7.33. Let us assume I make 7 units of P.
This 7 units of P will give me 45 rupees of throughput per unit, which is nothing but 315 more rupees of throughput. What was my loss? 300. I add 315 more throughput units. I am in profit of rupees 15.
What did the boy ask? He said, sir, I need 400 rupees to make this fixture.
400 divided by 15, let us say around 27 weeks, 6 months. That's all is the return on investment.
But do you think with your current way of thinking, this project will ever get approved? Quite unlikely. Because in this project, everything is going down except 1 minute being saved at B. In contrast to that, 3 minutes are going up on C. Net saving is a loss of 2 minutes. This is a simple company. If it was a complicated company, we could be talking of thousands of products. We could be talking of hundreds of products. Since this is a 2-product company, we are left with a very easy and liberal way of saying what happens if I make P first and Q next. It's such a small thing of just changing the sequence. Let's change and see what happens. So the calculation proceeds like this. The first 1500 minutes of resource B will be taken to produce 100 units of P, which give me a throughput of 45 rupees per unit. I have consumed 1500. I am left with 900 minutes of resource B. Each unit of Q takes 30 minutes of resource B. I'll end up making 30 units of Q, which give me 60 rupees of throughput per unit. So the equation goes like this.
100 units of P multiplied by 45 units of throughput give me 4,500 rupees of throughput.
I sell 30 units of Q, which gives me 60 rupees of throughput per unit. 60 into 30 is 1800 rupees of throughput I get by selling Q. If I sum up both of it, 4500 plus 1800, the total sum comes to 6300. My total operating expense, 6000. Wow. I have a profit of 300. Without doing anything, by just reversing my decision to make P first and Q next gives me a profit of 300. This liberty I had because it's a 2-product company. Very easy to experiment. Okay, let's see what you would land up telling this management. Sir, I think we are making a wrong decision by selling a high throughput product. We should sell one which has got less throughput. That will not cut. The other thing would be, sir, let us sell a product which gives me less revenue per product than a product which has got high revenue. That means the selling price of my product P is less and selling price of product Q is more. And you want to tell the management, sir, let us sell product P first. Similarly, it goes for raw material. Sir, let's make a product which has got higher cost of manufacturing, raw material price, than Q. It is not going to be convincing. And especially when you have a list of 15 to 20 products. What do? Can we just keep experimenting with this? Or is there a systematic way of finding out what is a good product to make? Please understand, what the cost told you is not giving the correct answer. The costing said Q is a better product. So we should make Q first. We got a loss for doing it.